Trump has been teasing the August 1st deadline, and we didn't see much right away. However, today is the day of collection, and the purse is getting fat. So let's get into it. Good afternoon. You are watching Filibusted. I'm Doug Smith, and I'm here with my partner in crime, Ryan Howard, and we are a little down for the count today. We're missing Troy and Reese. Troy is out on vacation, and Reese, unfortunately, had to call in sick. He has an issue with his throat, and he quite literally can't talk. He got some sort of allergic reaction to something. So prayers for Reese. Hopefully he recovers soon, and hopefully we can get him back around tomorrow. But we are going to talk about tariffs because, you know, it's the big fun topic right now. So I've got
everybody is talking about now.
Everybody's talking about tariffs. So the rollout is coming to full fruition after the August 1st deadline. The deadline to make the deal was on the 1st, but today is actually the collection day, and the numbers are huge. From the article that I have over here, this says Trump and his economic advisors have celebrated the considerably higher tariffs that have already gone into effect, correctly noting that they have raised more than $100 billion in tax revenue without leading to catastrophic inflation or a recession, as some economists had feared. Trump smacked also a 25% tariff on India just yesterday as a punishment for trading oil with Russia, and those tariffs are due on August 27th. Every other country has a minimum 10% tariff with few exceptions. An interesting exception for the tariffs on goods is smartphones. No tariff rates for smartphones. Another exception includes a break on goods that utilize at least 20% American parts and labor. In July 2025 alone, the U.S. collected nearly $30 billion in tariff revenues, a staggering 242% increase from July of 2024. And then as of early August, this August, cumulative tariff revenue for the year has surpassed $127 billion, and that is a 132% jump over last year. For the current fiscal year through June, customs duties totaled $108 billion, 94% higher than the same period in 2024. And lastly, the White House projects annual tariff revenue could reach $300 billion if current trends hold. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick both affirmed this projection. So I've got a little video, a good little like kick this story off kind of video for you guys here. Bloomberg put this out just a few days ago. We're going to watch this video, and then I've got a question, and we're going to start up this conversation. Hold on.
Here's a look at earnings expectations. What a chart this is. It's been a very strong quarter despite tariff uncertainty, with 82% of S&P 500 companies beating estimates so far. That's the highest rate since 2021.
Seems pretty all right.
82%? Yeah. Not bad. Not bad.
And you know, I know probably that that graph might be a little cherry picked or you know, secluded or whatever, but you gotta love the really dramatic like drop and then the bump up like that. It's fun. So here's one of my big questions for you, Ryan. And I don't know an answer to this well enough, so I hope you've got some insight. If not, we've got all kinds of other things to talk about. But how much of these tariffs do you think are going to be passed on to the consumer?
Well, okay, so this is a big question because everybody who puts their little question into Grok or ChatGPT, they get an answer back and they say the U.S. consumer always pays, and it's kind of like, okay, well, I don't know how good your prompts are. I mean, what they're probably getting is the academic answer of what's a tariff and who pays a tariff, and that's what the AI is giving. And it's like, well, technically, yeah, tariff is a tax on an imported good, but who pays it is really not so straightforward. So you enter into a negotiation. So I've worked 20 years in global supply chain. So this is somewhat relevant. And when you are having trade agreements, it's not actually typically between, like, there are some things where countries say, we're going to buy this and we're going to buy that. But really, as a private company or even a publicly held company, we're making this, we would make decisions on our strategy for who we're going to buy parts from to make what we want to make or resell what we want to sell or whatever it is. And so there's a negotiation that always happens on price. And so if I'm going to pay it as the buyer, Well, okay, but then if I'm going to pay it as a buyer, then I'm going to say, well, then you're going to have to give me some other discount or some other offset for that cost, or you're going to have to give me a certain percentage or faster access, or I can change my orders faster. Like there's a way to get the cost back to where it's even, and it doesn't necessarily have to be passed on to the consumer. So technically you can say, yeah, but it's not necessary. You could add it back into the price. You could, I mean, there's lots of different ways to go around. If there's legal ways to do it, obviously you want to stay in that area. But as far as whether they're actually going to lead to higher clothing prices or higher iPhone prices or higher whatever it is, not necessarily. And it could, and in some cases it's probably unavoidable. But I think overall, what we're actually seeing is a lot of these are, and we'll talk more about this, but it's actually not necessarily the strategy of just endless tariffs for the rest of time. This is actually restructuring the global trade. And because the way it's set up right now, a very strong US dollar means that it's very hard to export from the US and to manufacture in the US. And what that means, though, is that if you are in the financial world, you're a financial elite, and you have US treasuries and bonds and stocks and all this stuff, you could do very well in that case. But in the long term, it won't last because it will gut all of what's happening in the US. And that's already happened where we've kind of sold out to China and all that sort of stuff. And so what this is trying to do is not destroy that, the leverage that we have with the financial instruments and the benefits there for the financial elite, but at the same time bring back and reshore and friendshore, as you call it, reshoring to America and also outsourcing to friends instead of just frenemies or enemies or whatever you want to call China, and actually making it a stronger supply chain that's more durable and has national security interests in mind, which is really been a significant issue that I've tried to talk a lot about. So people want to try and simplify it and say, yeah, well, the consumer's going to pay it. It's like, well, it's not necessarily passed on, because a lot of things, if people are going to pay 30, 40, 50% more for something, they just won't buy it. Like, I guess I don't need that bicycle. I guess I don't need that extra shirt. So it's not quite that simple. In some cases it is, but not everything. That's my short answer.
Well, what do you think of this idea that, at the end of the day, tariffs are taxes, right? We already have taxes. So what if
the definition is a tax on imported goods? Yeah.
Right. Yeah. And so we already know what taxes are doing to how people respond to taxes in general, because we've been doing that and we've just been increasing taxes over the years, and it's been getting more and more. Right. So what if we start decreasing taxes, like regular taxes? I mean, so how could that potentially offset a cost of tariffs in a way, or is that thinking too simplistically?
Can you give like an example, or could you say that again? You're saying the taxes, lower taxes in the U.S., like as in income tax or property tax or sales tax?
And property tax actually is a big one on the scene right now too, because DeSantis keeps talking about that. But just the idea that taxes going down means the general public wallet gets fatter means tariffs might be offset on that end. Like, it's kind of a weird way to do it, and honestly, it's not my favorite thing, and I don't think it's the best.
So we're saying, hey, we may pay less taxes. We may pay more in some goods that we're purchasing, but we're going to pay less taxes. So it's a net benefit to the American people.
Yeah. Is that do you think that's a potential thing, or is it even different than that?
I do think that's sort of an aspect of it, but to me, I think it's more, I don't think it's a holistic strategy. So we can't really take those. So I like how you're kind of tying some of these together, but you have also the other things where the government needs to function. The government needs income. The government, and taxes is really basically the way to do that. But I think I don't think that that's necessarily a justification for the tariffs. I think for me, the tariffs, the big thing for tariffs is, let's get countries to stop taking advantage of the United States. That the U.S. has allowed them to take advantage of them. And there's a paper that the Trump administration put out. I was going to try and find it here, but it's what's it called? It's the America First Trade Policy. It's from the Federal Register.gov. And it's actually goes into, I mean, that's a major goal, is just national security and shoring up supply chains and all those sorts of things. So that's really these tariffs. There's a benefit to me. It's great that we have income coming from them, But that's almost, I hate to say it like this, but that's almost like a side benefit, because the real benefit, and you might think that's crazy, that's the entire point of a tariff. Well, the way the Trump administration is using them is to literally restructure manufacturing strategies around the world and restructure trade away from
That's a good point.
China. And hey, if you come and you make a deal with us, it's happening, like, especially in the South, like the global South. And if you come to the U.S. and you make a deal sooner than later, you're going to have a better trade deal. And you know what? All this is, people need to understand that Trump's a businessman. And in business, you have leverage. And if you don't understand your leverage, then you're not going to use your leverage. Well, I think most of these political leaders, maybe they come from law and all that sort of lawyer background and all that. And that's all great. That's great for policymaking and that sort of stuff. But when it comes to negotiating and having real leverage that you need to use, you see, the U.S. has wasted the leverage, or it's been traded for personal benefit for the leaders in the past. And so instead of using the leverage, so that's all that Trump is doing, is it's kind of like, hey, we're sitting on this gold mine of leverage where we can actually say the way we want things done, and people step to it. They try and say, oh, we're not gonna. Well, even Europe and Canada and everybody comes out publicly and says, we're not gonna, we're gonna do reciprocal tariffs. And then they quietly just kind of back down and just kind of do what they have to do.
Because this is what Trump has been saying for like years now. Even like in the first term, he saying everybody's taking advantage of the U.S. Before, I didn't really realize he might have been talking about tariffs, but I read earlier that the U.S. had like the lowest tariff rate. It was like 2.5%, something like that, and now like the minimum is 10%. But what the article was saying was 2.5 was like significantly low, and that to me suggested that people were taking advantage of that opportunity, and that's what Trump has been talking about. Like, people are using us, and it's time we stop that.
Yeah, and I want to be clear. Like, the U.S. they've been using us because we've let them use us. It's because we literally have rolled out the red carpet for these countries to do this to the United States, and it's just disgusting. And so the American elites sold out U.S. manufacturing. And like I mentioned, but they're all benefiting because all of their income or whatever their wealth comes from the financial instruments, which benefits from a strong dollar. But a strong dollar, the dollar is strong because I think it's 60 or 70% of the transactions around the world involve the dollar. And so in all the Federal Reserves around the world in these different banks, a lot of them have a lot of dollars. And so that's why the dollar is so strong. But that means that it's very hard to manufacture parts in the U.S. and export them because it's so expensive compared globally. And so, I think that's the key, though, is we need, and Trump has been saying this for decades, like we're being taken advantage of. And I've been saying this for, at least 10 years, but my understanding of it is getting deeper and deeper the further we go into this, just because when you look at how a country is, we have what's called a deficit with a country. So that means, that simply means we buy more stuff from them than they buy from us. And what this is, and that happens because they put tariffs on like cars, or they just don't allow us to sell things there. Or like in China, you can't open a plant here unless you do a joint venture with a Chinese national owned company, which means you have to, I said joint venture. I didn't say partnership. I said joint venture, which means you share all of your IP with them. And then 3 years later, they don't need you anymore. And now, guess
Isn't
what?
that wonderful.
That's it. And so that is
That's
the
why
way
we have
they
all
do
the
things.
cheap knockoff Chinese goods on the market. Is that an accurate result?
That's part of it. But also, if parts are made there, I think the people, they shut all the management leaves the plant, or whatever. Some workers leave the plant, and then they get the order fulfilled, and then you just make 1,000 extra and go send those over to the black market over there. That's a part of it too. So you go to Beijing and you go and you buy something. It's like it's a knockoff, but sometimes it's actually the real thing. They just made more of them than the order had, and they sell it.
That's hilarious.
Yeah, then they just sell them over here, and this guy, the manager, gets the money in his pocket and whatever. And so
well, the more hands it goes through, the more the consumer has to pay for it.
And you might say, Ryan, how do you know that? When I was in Beijing, I went to the mall there, and I went and got a nice custom suit, which actually is not a knockoff. You literally say, hey, I want that material on the shelf, and they go and they make it, and they measure 24 spots, and then they make it for you. But other stuff like a bag or Beats headphones or whatever, and I asked them, I was like, well, how do you guys make these? And they're like, oh, dude, they just they just make more of them and then they bring them over here. Like, are you
Wow.
kidding me? So yeah, I mean, that happens, but we're kind of getting off the point here. But the point is that the goal here is really to get a realignment and to set up basically the environment so that it makes sense for companies to manufacture in the United States and to reshore, because all of these companies, like I worked for a Fortune 100 multinational corporation, and they've got factories in like over 30 different countries. And it's like, well, you're not going to make everything you sell. Like if you're going to make one model of a tractor or of a car, you may make a model for a country you're selling it in, or you might make several models and sell them in different countries as well. So it's kind of like, it's not practical to make everything you make in every country, but in some cases it is. And so I think what they're trying to say now is, like, if you look at what Apple, and I'm sure we're going to get into this, and what they're doing, they announced billions of dollars that they're going to invest in manufacturing in the United States. And that doesn't happen if it's not an environment where it makes sense. And so that's what that's what Trump's getting rid of with this tariff situation, is he's making it more incentivized for companies to actually produce things in the United States, because just with the strong dollar by itself, there's a lot to go against. And so that's kind of my main point of this, is that this is not just about getting money for the United States. It's part of that, but this is really, and Trump has to come out and like, it's not a bluff. I mean, he really means it. Like if they don't come March 2, like they're supposed to, then it's going to lead to tariffs. And so we've seen that is the case, but the real goal is restructuring and making it more favorable for companies. And even Ford companies are coming to the US. I saw, NVIDIA and Hyundai and all these different, I mean, they're also committing to things. And so that's kind of my main summary here, is that this is about restructuring the global trading system. And I've got an article, that I can show from November 2024 from one of Trump's economic advisors that said
this one that we got here.
Yeah. So I don't know if you want to go to that now, but
why not? Let's do it. Here we go.
Yeah. So did I answer your first question? I want to make sure I
generally. So restructuring is kind of more the angle of the tariffs, and restructuring meaning, in a sense, or not in a sense, but meaning getting more onshoring of production so that it's happening over here. I guess my only question at that point would be, and maybe you'll answer this with some of the stuff that you have here, what will the cost difference be like when we do get things reshored to the US? Because that can get kind of muddy real quick, because if I understand correctly, one of the reasons why they were producing outside the United States is because it was cheaper in the long run. So it's going to be more expensive here in the US. So how does that all play out? That's another big question, but let's see what you got pulled up in this document first and see if that gets answered within it.
Yeah. So I will just say, in general, if you want to know whether something's going to be cheaper or not, it really depends on the product. And so sometimes if you get something cheaper, that means it's cheap, it's lower cost, but it's also cheaper in quality. And sometimes it means you get a better quality. And sometimes, like I saw when I was in one of my jobs was a supply-based manager, and that's a strategic sourcing job where you look around the world and you say, I got to buy these 5 different parts to go inside this engine, or to go inside this vehicle, or to go inside this whatever. Where's the best place for me to buy them? And you're looking at cost, you're looking at shipping costs, because that's the thing, is you might get something cheaper from India to put in your vehicle, but you're going to pay to get it over here. And then you've also got, is there quality concerns? There, utilities over there are not the same price. It's more expensive to have electricity there versus, but lower labor. And so it's kind of like, there's trade-offs, but then you've also got the cost of communication and how much work it takes to manage that relationship with that supplier. So it's very complex, and it's just, it's not so straightforward. We can simplify it so that we can understand it. But when you're actually making this decision, just because some widget is cheaper to make doesn't mean it's cheaper overall, because you still got to get it here, and you still have quality controls. You still have potential loss because of a 6 or 8 week shipping delay. I mean, so there's lots of stuff that can go into that.
Balance it out. That makes sense. This question kind of hand in hand with what I was just saying from JM here. Apple is a curious endeavor. Their prices are already at a premium. Do you think they can continue to see growth as manufacturing costs go up with domestic production? Do you think they can continue to see growth? That's a good question.
Well, my guess is that I don't know that we've seen people are willing to, in the past at least, they say if it says made in the USA, they are somewhat willing to pay more because that's sort of synonymous with better quality.
Yeah.
Like that's synonymous with better quality. And so maybe not as much as in the past, but maybe there's going to be a comeback.
Well, hey, I know if I see, at least if I can see it say made in the USA, I'll lean that direction immediately. Like it's a more trustworthy stamp, and maybe that's psychological. I don't know, but maybe it also is real as well. But if I knew my Apple phone was starting to be made in the USA, I feel a little bit more comfortable with that because, these days I've been thinking a whole lot about going back to the Nokia phone, and
yeah,
maybe they'll change my mind. Maybe I will upgrade.
Yeah. Well, I think they're doing screens in the US. They've got a couple of factories that they're going to be just doing the screens, but I would say it's not necessary. I don't know that you're necessary. Have they talked about, I saw the comment said about a higher cost. I don't know if it's accepted fact that it would be a higher cost. Because you might also have you might also have different automations. There's lots of studies. There's lots of things that need to be done and supply chains that need to be set up.
Production coming back over, so much production coming back over to the States, though, it might actually end up balancing out in some sort of way. Like, because you can imagine if you don't have to ship hardly anything to you because everything is domestic, then that's just one small example of how it could be better. But also, in addition to that, I think that Apple is just such a massive company. They might be able to afford eating a little bit of whatever cost, if there is one, or they might be able to afford paying the right people to figure out how to not have to eat that cost.
Yeah. And that's the thing, is that's how it works with, when I was a supply-based manager, one of the two of the components I was responsible for buying, you could not buy in the United States. Like it was an internal engine component, and it's like there was no options there. And so Trump, that's one carve out where he said, well, if there's no options, then that's different. There's he gave some exceptions for where companies, if they're going to be reshoring and they're going to commit to building factories and all that, well, then they don't pay any tariffs on anything. So it's kind of like, this is really, there were a lot of barriers in the way, keeping companies from doing things that they wanted to do, which is to manufacture in the United States. But there are too many barriers that just don't make that a good strategic decision. And what Trump is doing is removing those barriers so companies can do what makes sense for their strategy, what makes sense for the strength of the U.S., and what makes sense for their shareholders and the like. And so, so you
have more in these articles right here.
Yeah. So let's go ahead and jump in. So this is. This is called A User's Guide to Restructuring the Global Trading System. And the whole point of this is for me to say, look, this was written in November 2024. And then shortly thereafter, Trump became president and was sworn in January 2025. And so then what have we seen in the last 8 months since then? Well, we're seeing it working out exactly as this said. And so Hudson Bay Capital, so User's Guide to Global Trading System. So what I did was I took this, and there was a interview from the Wall Street Journal with, I'm going to tell you, it's between Luke Vargas and also, where's the guy's name? Stephen Myron. Okay. And so he's with this Hudson Capital, and he's the one that wrote this thing here. And so this is talking about, bonds sell off as new U.S. tariffs upend global trade. And so the point I'm making here is, that article said the bonds were going to sell off, and he explained why that was going to happen and what is happening with weakening other countries' currencies and those sorts of things. And so the point of this is that the U.S. dollar was overvalued because of global demand as a reserve currency, and that hurts American manufacturing and makes exports more expensive and imports cheaper. And so the U.S. basically ends up subsidizing global stability and trade and security, and it's at its own economic expense. That's the point, is that we sort of gut the U.S., but everybody gets stability because of a strong U.S. dollar. Well, then we can't leverage the strong U.S. dollar to export. So we got to make some changes, because otherwise we're going to be nothing left here. And then when the dollar does collapse, then we're up a creek without a paddle. And so that's a problem. And so the key takeaways from this article here were that basically talking about the dollar dynamics and talking about how we run trade deficits, but we have reserve assets. And so then it talks about tariffs as a tool, that it says tariffs can raise U.S. revenue without causing inflation if foreign currencies depreciate in response. And so,
which is what's happening.
Which is exactly what's happening. And so, and I also have, so Stephen Myron, the guy that I said that wrote this, he's the chairman of the Council of Economic Advisors. Okay, so with Trump, so he's a senior advisor for the economic policy for the Treasury Department as well. He's held some other other important positions as well. But if we look at, this talks about currency policy and how unilateral deals basically weakens these other currencies, like I said, and then it's leaking trade and security. So having these different benefits for that, and then increasing financial market risk, and there would be market volatility. And it talks about tax reform coming as well. And so if we look at what has actually happened, so the reality is the U.S. rolled out these tariffs, and we saw the yuan began to weaken. So that's China's currency. And so all the Asian currencies were under pressure. We saw investors dumping treasuries and yields rising as the foreign capital retreats. And so that's this sell-off that they talked about. And so that was expected. And so then the U.S. or European Union started to do retaliatory tariffs, but they backed off on them. And then we had Japan, South Korea, they were also fast-tracking deals with Trump. We saw that. They predicted that. We saw that happen actually as well. And then the Treasury collections rose while the inflation remains controlled. And so those were early indicators that he said would happen, and they all happened. And so we see foreign nations negotiating down their own tariffs. We see the yuan continuing to weaken. We see the forecasted currency volatility risk happening. We see offshoring, or we see offering defense-related concessions to countries like Japan, South Korea, European nations. We see tariff treatment and security cooperation, all these kinds of things. And so the bottom line is that it's not about, it's not reactive trade chaos. This is a deliberate reset that was happening, and it's just kind of beginning to be implemented. And there's a few twists here as well that are interesting as well, but it's performing almost exactly as they sort of modeled out in that paper. And that's just the reality. And that's the case of it. And it doesn't matter what Bloomberg or Reuters or CNN or whoever says, that is what is happening. And we're seeing companies that are making decisions that really the proof is in the pudding. I mean, you can't really argue with the fact that these companies are making decisions that are long-term strategic decisions. You don't just pop up a plant and then change your mind.
Yeah, absolutely. And these are big companies too. I mean, Apple, I think, is the best example right now, because Apple, when you think of Apple, you think of like an American-made product, because this is where it all started. And yet it's just been actually made somewhere else all along, where India, China, where like Vietnam, I think, right? So it's interesting to see these huge companies making massive decisions to spend billions of dollars to bring back production to the States, maybe not 100%, but at least a very large portion of it. And like you said, that's not something that they are just doing flippantly, like, oh, whenever Trump's done in this term, we'll just hop back over the sea, like it's staying here. They're investing into the country, and that's where we're going to hang out, because that's just going to benefit everybody, including them, probably benefit them even more. Apple, you mentioned them earlier. I got a couple notes on them actually, because like I said, I think this is the best example of what's going on. Just committed another $100 billion on top of the already $500 billion investment that they committed to previously this year. So a total of $600 billion of investment into the country via, things like having the production over here and creating jobs and all that stuff.
Yeah.
And here's a little quote from an article I read. As part of its investment, Apple has agreed to an expanded partnership with Corning to manufacture 100% of the iPhone and Apple Watch cover glass in Kentucky. It will also work with Samsung at its chip fab in Austin, Texas, to launch an innovative new technology for making chips, which has never been used before anywhere in the world. So that's a pretty big deal.
Yeah, chip manufacturing, I don't know if people understand. So if you look at China, you always hear about China wanting Taiwan. That's because I don't know if it's like 70 or 80% of the semiconductors and these chips and all this kind of stuff in the world are made there. And so it's quite a security risk for us because they go in everything, like name something that's not used in. And so, and rare earths and all that as well. What's that?
I said right because I was like, yeah, I agree, and then it like really settled. Like, yeah, that's right. Like how, like man, so much.
Everything. So Apple expanding their semiconductor production in, I think, Texas, New York, Utah, Arizona. You have expanding mining, recycling, earth, precious minerals, and development in California. You have all these kinds of things happening. So these are actually serious because it's also, again, part of the national security situation and national in our national interests. And so there was, let's see, Apple had a total plan, like you said, domestic investment of $600 billion. And so they're investing, let's see, the TSMC Arizona facility. So that was a significant portion of the chip production that's going to occur there in Arizona. And so I think they're becoming the number one of the top ones for TSMC. It's going to create thousands of jobs across the U.S. in manufacturing and research and development and all that. And so that's another thing is that a lot of people say, well, this widget only costs you $1 to make and you're selling it to me for $4. And so that's ridiculous. You know, you shouldn't be making that much. And they don't realize that, you know, there's more cost than just the material to something.
Yeah.
You have to pay somebody to design it. You have to pay somebody to get the quotes for who's going to make it. You have to pay somebody to do all the logistics for it to make sure it's happening. You have to place the orders. You have to do the design. You have to do all programming, all kind. I mean, there is all kinds
and
of.
There's a lot of it.
Yes, and you have plants that you have to finance, and you have utility bills that you have to pay, and you have so it's just absurd. I heard someone call it the idiot index, where they divide the material cost in or by the amount that it's sold for, and if it's over 70 or something, they say, oh, this is really dumb, and it's kind of like, well, yeah, but if I'm going to make a little plastic stamping, it's going to be a little lower cost than it is going to be if I make a very, very complex engine I'm going to sell. And there's a lot more engineering that goes into that, and lots of things. So
yeah,
anyway, this also will bring supply chain resilience. And so Apple is strengthening its supply chain and reducing reliance on overseas suppliers. So we saw during COVID, it was interesting. I was in supply chain during COVID. My job was called supplier development. And so my job was to help suppliers evaluate new companies we were going to work with and find any gaps in their manufacturing and whatever they're doing and close them so that we don't miss getting our parts when we're supposed to have them. Well, we had very long supply chains in some of these companies coming from overseas. And so when COVID hit, we had, there was like 6 or 8 weeks of stuff on the water. And so we were, you kind of avoided disruption by having a longer supply chain because you could leapfrog that with other products. And then you had an 8-week timeline to get it figured out. And so it was beneficial in that case, but that's not always the case. If things fall off boats and things miss shipments and all kinds of things get held up. And so there's risks there as well. And that's where you have to, it's not so simple. Like you have to actually make a decision on what you're going to do. Like I worked for another company that also a very large multinational corporation, and their competitors moved their production to Mexico for these particular products. Right. And their cost to produce was higher than the price that their competitor was selling it at. And so they had to renegotiate with the union and all this kind of stuff, and they didn't want to do it. And then the union didn't agree. And so then they ended up having to move the jobs to Mexico also. And so it's like, well, the union shot themselves in the foot in that case.
Right.
And so that's a whole nother story. But I mean, it's just like, it's just not so simple as people think. But like I said, again, we can simplify it so we can understand it, but there's a lot of stuff that goes into it. So advanced manufacturing is another area that the U.S. really should be excelling in. And so you have different types of automation and that sort of things. And it's funny, like I have a book called Economics in One Lesson, and it talks about how when you try and protect things, like there are some, like this happens in Canada too, and in the US, where it's like, hey, you have to have people from our union driving these trucks, and you always have to have 2 people. And so then the truck would stop and they'd have to get 2 people in there. And it was just insane costs to do that. But they don't realize that, okay, so if automation comes in, then that job is just kind of repurposed. So it's kind of like that person.
To like that reminds me of the the whole minimum wage discussion. It's probably not terribly related, but it just made me think of the bumping minimum wage up to $15 per hour, and then you see all those memes hitting the social media sites where it's like robots making burgers now, and it's like, this is what happens when you and that would be, okay, let's imagine that happens. Okay, so then fine, you take those jobs, and now instead of flipping the burgers, the person
is maintaining the robot and making sure that the robot is doing its job. Well, guess what? That's not an entry-level job. And so all it did was take away an opportunity for somebody to get an entry-level job, which is what those jobs were designed for. I've worked for grocery stores. I've worked for retail stores. I had all kinds of jobs when I was a teenager. I did construction. I poured concrete, all kinds of stuff that were entry-level jobs that if I had stayed in that, you could have got, And so they're not supposed to be like a fully livable wage for your entire life and all that. And so fine. But all the 15-hour thing does is, this is where I say government needs to be realistic, and they make this policy and then they got a feather in their hat for their campaign slogan, but they didn't really help anybody. They hurt companies and they hurt employees, because the employees now can't get the job because there's no entry-level job available, and where are they going to get the experience? So that's another
part of the restructuring that you're positing as the angle here, like to be able to make sure that things like this don't happen in a negative way anyway. Like can't think of the right words, but like this, that sounds like a structure issue. Do you think that tariffs, the way that Trump is doing the tariffs, I should say, is helping to control some of those things?
I think that, I don't know if it's directly related to a minimum wage conversation, but I think it's the system. So if you have like the thing I'm worried about is, one of the things in the last 5 years we had in the manufacturing industry is finding people to do the jobs. It's like, because you there almost needs to be a government campaign to make manufacturing jobs great again, so like that's my concern is, are you going to be able to fill those jobs?
So with Apple coming in with all the production, like, Houston, they're kicking in Houston again, 2026. Houston is going to be ready. Their base is going to be ready for mass production by 2026. And there's going to also be an increase in North Carolina and Michigan factories. Do you foresee an issue with the workforce, like labor actually being there to do these jobs? How is that going to work?
Well, that is such an important question. And so I haven't looked at those labor markets, in the last couple of years, but surely if they're committing to put facilities there, they would be doing studies on that. Like how many engineers are they going to need? How many?
Yeah, they're not just going to prop up a facility and then like watch it crumble, probably.
Yeah, I mean, so like literally, I had conversations when I worked for this large multinational companies. We tried to get companies to put a factory in the U.S. or to put it, and they would look at different places. And we had a company that I wanted to buy parts from this company, but when I visited their plant, I saw that they had terrible quality metrics and all kinds of things, and they couldn't get, as we just talked about it, you could just tell they had problems getting people. Like they could get all the engineers they wanted, but then they're trying to get engineers to run machines that they're not going to do that because they had a terrible location for that particular factory, and they couldn't get the labor. People had to come from an hour away, and then another big plant came in, and so it's like, well, we're not going to drive an hour. We're going to go work at this other plant. And so, that needs to be a serious consideration. And so, but the thing is, though, manufacturing today is different. So you have a lot of technology in manufacturing. You have a lot of automation, and those are good things, because a lot of times it's a safety thing where you don't want somebody, you have different ergonomic things you need to consider, and avoiding injuries and having to be safe and all this kind of stuff. And so you have a lot more, fewer blue collar jobs, but those blue collar jobs can pay very good. And so it's like, or tradesmen and that sort of thing. And so there almost needs to be like a campaign from the US government to sort of show those as attractive jobs and to make sure that people are interested in doing those things, because you can make a serious living, especially if you're going to go and be an entrepreneur and own your own company. And that's sort of some of the stuff I'm doing consulting on, is helping companies do that better. But at the same time, these companies do need to be making sure they have the labor to do what they're going to do. But there's always a technology solution, but there's some things that you can't. You just need hands to do it.
Yeah, that makes sense. Well, I really wanted to show this video because it just was hilarious to me. I don't know if you saw this or not. Let me,
let's see it.
This is Tim Cook, the CEO of Apple, bending the knee to Trump. And I just thought this was, on one hand, it's really cool because it's like, this is a neat thing. But on the other hand, it was a little bit cringe just because I don't like Tim Cook. But maybe that's all. Man, you tell me. I'm going to play this quick little video.
Let's see.
This glass comes off of the Corning line. It's engraved for President Trump. It's a unique unit of one. It was designed by a U.S. Marine Corps corporal, a former one, that works at Apple now.
It's good. He's done well.
Designed it for you. And the base comes from Utah. And it's 24 karat gold. And it sits, I'll take the liberty of setting it up.
Wow.
Congratulations.
Thank you very
Mr.
much.
President.
It's
Thank you so
fantastic.
much.
So
that
what?
base was a brick of gold.
I mean, I guess they know their customer, right? So Trump's Mr. Gold, so got to have it flashy. What was the point of that? I mean, what was that?
That was so that was after they announced the extra $100 billion investment into the US, and also after the announcement of moving their production into Kentucky for the glass that's going to be used for the iPhones and the Apple watches. And so it was just kind of, I don't know, what I saw that I was like, oh, that's cool, especially because Vet designed it, and all that. And then I was just like, well, that's weird.
So in that case, though, I do think that is a neat, unique thing, because it's a factory that's making glass screen. Okay. And so then he said it was a unit of one. So apparently that's the first glass that they made out of that. And so it's a very symbolic thing. I mean, it's very common in manufacturing where it's like, hey, we made our 1 millionth vehicle, or hey, we made our 1 millionth engine, or here's our first of this model, and we're going to do it as a thing way to honor something. And so there's like companies that have customers can come in and watch their vehicle actually being made, and kind of, I mean, there's a whole, there's a strong brand there. So I think that's kind of neat. Maybe the presentation skills could be worked on. But
that's probably what was so cringe about it for me. I was just watching Tim Cook so awkward, like, and then it's kind of thinking about like, is Tim Cook a Trump fan? I don't know, but he certainly is one now. I can say that much.
Yeah. I mean, maybe they just did the packaging to where it was kind of hard to fumble with it, whatever. But, yeah, I think, what was I going to say? There was Eric Scott here. There was a comment. He says skilled labor. I don't know if you can pull that up.
Let's see.
Kind of going back to the conversation here. He says, yeah, skilled labor is a big problem, especially with Apple. It's one of the reasons they're not fully committing to the U.S. So that's kind of the point that I was trying to make. Thank you for that, Eric, is that it's not so simple to just put a factory and get people. So, I mean, that's why you see like big industrial areas like near Mexico City or near certain areas in the U.S. where you have, used to be Detroit was where all the plants were for vehicles and all that. And so you had a lot of suppliers popping up around, and it's still there, but I mean, you had a lot of suppliers and all kinds of stuff, and then factories and a lot of people could live there, and then you could always find a job. But if that gets gutted, or if his factory's put somewhere where it doesn't make sense, and so there's also this public sentiment around what kind of job do you want to have? Everybody must be a creator now, or whatever. I don't know.
Yeah, or influencer. So,
influencer. Maybe that's a better.
Influencer making $100 million a post. That's not a thing.
Right.
Don't try to do that.
Right. So, I think that. I think it's a good point. It's like we said, it's something that these companies have to consider. And so, I think it's interesting though. But I will say there are companies that are sort of just sitting, waiting to make these decisions, or maybe they already have factories and they just want to invest more into those factories, but it doesn't make sense because of whatever reason, or maybe they want to add a shift, or maybe, whatever it is, or just reshoring suppliers and knowing that there's going to be a supply base here for that. Is a big part of it. And so, like we said, this is something that would last beyond Trump's presidency. This is not this is not like just executive orders that, disappear as soon as from someone from the other party comes in. This is something that is a structural change that then changes the way global economics work, and it changes the way the U.S. sits, and it changes the way global trade works altogether.
That's a good point, and I think that's really important for people to remember, because we're so used to seeing the executive orders come in, and then we're so used to seeing them go out nearly as quick, depending on who's in control. But this is a big thing, and it's here to stay, which means that this was all designed with the long term in mind. This isn't a short term solution. There might be short term parts to it. Like you said earlier, we might not have tariffs exactly like this throughout, but they are setting up a long term structure that is going to be more solid and more reliable than what we have had in previous years. And you can't get rid of that with a dismissal of an executive order from the next president in line. So that's really important.
Yeah, I think so. Another thing here, as we talk about this realignment, the idea also is that trade access is not a right. It's a privilege. So for example, like if I want to sell just think about it. If I get a little food trailer and where am I going to go? Am I going to go to the middle of a field and try to get people to come there? Or am I going to go to a farmer's market where there's traffic every Saturday morning and try and sell there? Like you're going to go where the traffic is, but you got to pay to have access to that market. Okay. So I have to do things the way they want me to do it. I got to go through all the regulations. I got to have everything legit. If I want to sell coffee there or whatever, or food. And so it's the same thing. If other countries want access to US consumers, well, they got to play by our rules. And it's the same thing. If we want access to their consumers, well, we got to play by their rules. And the problem is the US has been playing by other countries' rules for selling to them and for buying from them. And it's been an absolute lopsided joke. And that is where this is going the other direction. And it's a values-based trade system that, it's no longer, free trade for you, but not for me. It's more of this is a filtered trade where it's like, this is what makes sense.
We're not a format anymore. That's what this is coming to.
And this is not protectionism in the sense of, like, for example, we're going to have this union and make it very like the longshoremen on the ports, like where they just, they don't want to, they're like one of the only few areas in the world that don't have 24-hour port run capacity, and they don't allow automation and all kinds of stuff, and they're just shooting themselves in the foot. And so that's not what this is. This is not saying, hey, we're going to protect these markets and prop them up even though they shouldn't exist. This is saying we're going to right size this and make people operate the way they should operate so that we can have and everybody, it's a tide that lifts all the boats, and so, and it takes the people off and you see like China is having big problems because it was a artificial, it was a market, what do you call it? A market surge that shouldn't have really been there because it just disappeared overnight. That just shows how fragile it was, and so that's kind of just another thing to look at. Is it's a market that companies want to sell to, and and
everybody wants to be a part of what the U.S. is doing because, like we've said before a few times, the United States is the biggest consumer in the world. Nobody wants to leave this alone. So people are gonna pony up in one way or the other, it's gonna happen because there's just too much money to be made from the United States. And when you have somebody as strong-willed as President Trump in office who's making these things happen, they're gonna come to the table. That's one way or the other.
I gotta say, so you said strong-willed, and that's right, but he also knows what he's doing. So I had an example of somebody who did not know what they were doing. So this happened in business and I wasn't involved in this, but this shows where you got to know your leverage. And a lot of these countries try and puff up and they try and use leverage that's not really there. So an example was, this was an OEM, original equipment manufacturer, large company manufacturer, and they tried to bully a supplier and say, you're going to make our parts because we need them next week. And you got to prioritize us over this other customer. You have to do what we say. And okay, so if we were a big portion of that company and, we had a good relationship and okay, maybe you'd handle it differently. You just say, look, can you do me a favor, bring your people in this weekend? And we really need these parts. We don't want to shut our lines down. And then they may do it. But this particular person was very arrogant and did not know his leverage. And so that supplier, instead of sending the parts, they sent the tools that they used to make those parts. And they sent them to the engineering center and they just showed up on a flatbed truck and said, we're not your supplier anymore.
Oh, dang.
And so they said, here's the tools we're using to make your parts. We're not sending you the parts. We don't want your business. So that's the point. That's what happens when you're just a bullhead and you don't know what you're doing. You don't know your leverage. Right. That is not what the case is here. Trump knows what he's doing. Trump knows how to use leverage. Trump knows that when you negotiate with China, you're thinking 8-12 months in advance. It's not the same as how you and there's status you have to think about. There's public versus private. It's much different than if you negotiate with Germany or Brazil or Europe. It's like, and he understands that because he's been doing global business for decades. And so I think it's just, it's a lot of fun to watch because you get to see this finally happening in politics, where what we've been seeing in business, ever since I've been involved in it. And it's kind of neat to see it play out, because it's kind of like, there's low hanging fruit is what we call it. Easy results to get. And like Trump is like tripping over fruit, it's so like it's on the floor, like it's so
he's
easy.
Making wine, man. He's stomping wine.
Yeah. so
that's funny.
Yeah, it's interesting.
Do you think one last thought, and then I think we'll call it. But so we've had a surplus for the last 3 months now, June, July, and now August. Has that happened before? I didn't think to look that up before we started this. Have we ever had a 3 month in a row surplus?
For a surplus of what?
Like from the excuse me, from the tariffs coming in, like the whole country surplus with the, can't remember the exact terms, but let's see, I got it. The U.S. collected.
Oh, geez, I'd have to look up. I don't think so. I think that's the it's a 3 month has not been sustained. I don't think in the past. I think there was like the 80s or something. There was like an anomaly, but it wasn't like what's great about this is it's like I feel like I'm just beating the dead horse. It's a restructuring. Like that's the great thing, is that it's like you should expect to see some of this. And now whether or not that maintains, what has happened is the restructuring. And so you have these commitments from these other companies that are the long tail on this is going to be is far improved. And a lot of these benefits we're going to see long after we're done talking about these tariffs. And so I'm sure that, but it's great to see we are seeing immediate benefits as well.
Yeah.
But
that's Trump did say we were going to all be real happy in August, and we're still only a quarter of the way through August. So I'm curious to see what else comes for the rest of the month. But well, that's a great conversation, Ryan. Thank you for joining me today. I've been doing it on the solo for the last couple of days, so it was nice to have somebody else. I was getting scared there for a minute. I was like, dang, I'm gonna have to go solo again.
Yeah, you did. You're doing awesome this week, though. It's fun watching.
All right, so we are gonna go live again tomorrow, and actually, it's gonna be Ryan tomorrow at 2:00. So I hope to see you guys all there. Thanks for tuning in today, and I hope you guys all have an amazing rest of your day. We'll see you next time.
Bye-bye. God bless.